assistant. Good evening, ladies and gentlemen, and warm welcome to you all. And today we have with us one of the erudite speakers of our community, Mr. R.S. Balaji, who will be dealing with standards on auditing, SA 500, 501, 505, and 570. A warm welcome to you, sir. I wish to make one or two statements before I hand over the proceedings to the speaker. Of late, the disciplinary proceedings are taken to a higher level, and more of damaging environment in the society as such. So this is very dangerous trend. The very reputation of the profession is at stake. So all the standards on auditing ought to be very strictly complied, and if not complied, the disciplinary proceedings are there to see the member is kept in check. So additionally, you all have seen last week, last day of the month, previous month, a new amendment has come in wherein the disciplinary mechanism itself is restructured, wherein majority of the members are non-CAs and headed by non-CA and a bureaucrat. So we are given into the bureaucrat. That was indicated at NAFRA level, but NAFRA was faced only by very thin majority of the members. Now, this disciplinary committee proceedings, every member, whether it is a small or medium practitioner, almost all the members are covered here, and the very concept of what is called a true and fairness, interpretation and understanding of true and fairness for a non-CA member or a non-commerce member is not at all easy, or they interpret in a different way than what it is in our books and practice both. So under these circumstances, it is very important that these topics are deliberated consistently, continuously, so that we all get updated. So today we have one of the experienced speakers who has already been in this area through the Institute's committees also. A very warm welcome and thank you for accepting our invitation, sir. In the absence of the chairman and the secretary today, I, the vice chairman of the SIRC, Mr. Panna Raj, is here to introduce the speaker to you, and it is my privilege to introduce him. Before he takes on, I take a minute or so to introduce him. He is a practicing chartered accountant specializing in audit and indirect taxation. The member Auditing Assurance Standards Board of ICAI 2019-20 and 2021. As a member Academic Council of Sri Shankara Arts and Science College, Kanchipuram. Member Editorial Board of the Padukas publication. Faculty for the following subjects for CA students: Auditing Assurance for CA Intermediate, Advanced Auditing and Professional Ethics for CA Final, Indirect Tax Law and Information Systems and Control Audit for CA Final. Awarded as Best Outstanding Student and secured first college first in BCom, and handled international taxation and corporate taxation in NASDAQ listed Indian company, and worked as AGM accounts in a NBFC company. Completed a certification course on international taxation. With this brief introduction about the erudite speaker and a very committed speaker, the speakers are the real pillars of the institute, because it, after all, the institute is there because of our what's called mental capabilities and our commitment to the nation building through the compliances and transparency in accounting and reporting. With this introduction, I hand over the proceedings once again to the stalwarts, one of the stalwart of the institute, or the pillar of the institute. I would call every speaker as the real pillars of the institute, because they dedicate their time and their passion and compassionate towards the members to share their knowledge. Over to you, sir. Thank you very much for accepting our invitation.
Namaste, sir. Thank you. Thanks a lot for your love and affection that is shown to me by way of the introduction. Being the Vice Chairman of SIRC, it's my privilege to have you as a part of this particular knowledge sharing session. Very good evening, one and all dear participants and my greetings to the office bearers of SIRC here. Especially being a new year where we are just beginning, either as a Tamil New Year or as a Telugu New Year, Yugadi, or whatever may be the case. Our financial New Year, April, 1st April, whereas being a chartered accountant, I wish you a warm greetings to one and all. I wish this particular New Year will bring a lot of prosperity and success to our profession as well as in our personal career here. Thanks a lot, sir. As you have rightly pointed out, today the challenging environment to a chartered accountant, especially in a disciplinary perspective or from the regulator perspective, is something enormous. Where being chartered accountants, we are very aware. We are aware about what we have to do. But the point is in executing and in order to go for a documenting with regard to the compliance, vis-a-vis the actually what we have performed is what challenging matters. Because after 2 years, 3 years time, 4 years time, when there is an investigation or there is a disciplinary process, it will be difficult for a person to come and prove that he has taken all reasonable care and caution, which is expected to be taken care through these particular standards and complaints here. So today being this particular session that exclusively focuses on audit evidence and related areas, we will be proceeding towards how practically we need to have implementing this and how we need to ensure that we are complying this particular standards in the regular practice perspective. So that being the objective of mine, I will be proceeding towards this particular aspect of discussion, sir. Just to make a minute, sorry. Yeah, I hope my presentation is visible.
Yes,
technical
sir.
team, can you confirm?
Yes, sir. Please. Yes.
Thank you. Thank you. This particular evening, for the next 3 years, that we are going to discuss about 4 important standards on auditing, which is issued by Auditing and Assurance Standards Board of ICAI, which is also validated by the Companies Act, where SA 500, SA 501, SA 505, and SA 570. So there are 4 important standards exclusively on audit areas. When we talk about 500 series of standards, the entire 500 series of the standards on auditing talks about audit evidence and the process of obtaining the audit evidence, which is going to be the core of our audit process here. 500 being the base of all other essays of 500 series, exclusively discusses about what do you mean by audit evidence, what are all the various methodologies that can be applied by a chartered accountant to go and get that particular audit evidence. And there are different essays like 501, which is on a specific aspect of verification, 505 again, which is on an external confirmation related process, and more importantly and very relevantly, we have SA 570, which is recently revised also, which talks about going concern perspective and also the reporting perspective with regard to a going concern of an entity in which I am an auditor here. Especially after the COVID pandemic, which created a lot of economic turbulence in the country all over the globe as well, this particular 570 assumes greater importance, and also there are recent changes by way of compliance and also for reporting, where we have CARO 2020 that is coming into place from this particular year onwards. Reporting, now we will be going for CARO 2020 reporting rather than the old 2016. In CARO 2020 also, very importantly, very new inclusions have been made. Specifically, if you want to talk about CARO, where we have 21 clauses to be reported by the auditor under CARO 2020, wherein the ratio is 7:7:7. That is, 7 old clauses that was there in CARO 2016 retained as it is, and another 7 new clauses that got amended with regard to the old one, and they have introduced, and exclusively new items of 7 clauses to be reported, where one of the aspect is having an impact on SA 570 also. All the standards are interrelated with regard to the compliance and reporting perspective. So this particular evening, we'll try to have a learning and the overview of all these standards and the intricacies involved in practical implementation, and to go for satisfaction that we have complied with standards on auditing as we declare in our audit reporting that we conducted our audit in accordance with standards on auditing here. As we all know, that standards on auditing is not only from the institute's perspective is important, but also from the regulatory perspective, that is under Companies Act 2013, which got mandated. in the earlier Companies Act 1956, they didn't talk about the way in which audit is to be performed. Companies Act 1956 was imposing only the duties of the auditor, and also the rights of the auditor, responsibilities of the auditor have been given for me to comply. But under Companies Act 2013, the way in which audit is to be performed is also specified, where section 143, which talks about the duties of the auditor, very categorically mentions this particular point repeatedly. 143.9, 143.10, and also even in 143.2, we have this particular impact of standards on auditing here. As you can see, every auditor shall comply. It's a mandatory compliance with auditing standards, which will be issued by NAFRA. That will be issued by basically by institute after going for the NAFRA's review. It will be made notified under the Companies Act by the MCA, which is mandatory for every chartered accountant to comply with, every auditor to comply with regard to a audit of a financial statement. The point that I am insisting here is, it is not only for a listed company these standards on auditing shall be applicable. It is applicable for every company, whether it is a private, whether it is a public, whether it is a listed, unlisted, whatever may be the criteria. These standards on auditing are mandatorily applicable. Further, it is not only for companies these standards on auditing are applicable, but also for any entity that I'm going for an audit, because my framework for assurance engagement very categorically says this: these standards on auditing, the engagement standards, are mandatory applicable here. So even it may be a trust, which may be a non-corporate body, still while doing an audit, I need to comply with standards on auditing here. Maybe a partnership firm I'm doing. Sir, it is an individual. I'm going for a tax audit purposes, where I'm complying a tax audit, and then I'm going for an audit of financial statement of that individual assessee. Whether I need to comply with standards on auditing or not, the answer is very much yes, because irrespective of the size, nature, or the legal form of that particular entity, whenever I take up an assurance engagement, especially assurance with regard to a audit of historical financial statements, which is nothing but an audit of a financial statement of an entity, whatever may be the criteria, standards on auditing is a must. And especially under the Companies Act perspective, it is mandatory for every one of us to go and comply. It is not only to comply that these particular standards, but also I need to have documentation to prove that I have complied. Because as the vice chairman was rightly pointing it out, the disciplinary mechanism is something going in a different perspective today. Even though that there may be non-chartered accountants who will be sitting in the panel and then evaluating how a chartered accountant has done his job, but still we may be in a position to prove through our documentation that we have done whatever that is expected to be taken care of here. So in this particular regard, the entire session is going to be a cautious cakewalk that we need to go in for, in order to ensure that we are complying with various regulatory requirements and also the standards compliance. Not only that, we need to also educate our engagement team, who are nothing but who are our audit staff or articles. While they do this particular audit, they need to ensure that these particular requirements have also been complied with. So with that particular objective, let us understand and let us go into this particular topic here, where apart from the Companies Act requirement or a regulatory requirement, inbuilt there is something called as audit opinion. The risk that an auditor, when the financial statement contains a material misstatement here, always a possibility of auditor going wrong could be there. Because the moment there is something wrong, immediately the first question goes to the auditor: what was the auditor was doing? Why the auditor has not detected? Where even the very old Kingston Cottonville case, where we addressed that auditor is just a watchdog and not a bloodhound, that particular term may not go right here today, because the regulatory environment looks the auditor in a different perspective. So always there is an audit risk, which is a component of inherent control and detection risk, the auditor possibility of auditor going wrong. This particular audit risk is further divided into two types. One is pre-audit risk and the other one is post-audit. That is pre-audit, even before auditor entering into the entity for performing the financial statements, there is something called as inherent risk and control risk is there. That is inherently the possibility of material misstatements in the financial statements, assuming that there are a lot of estimates and judgments that are involved in preparation of the financial statements, being inherent risk. and failure of the internal controls and non-detecting or preventing the frauds and errors in a case of an entity could be treated as a control risk. The possibility of actually the misstatements entering into the financial statement is happening through this inherent risk and control risk, which is otherwise technically called as risk of material misstatement, RMM. And the detection risk is exclusively from the auditor's perspective, the way in which I take up the verification process, the way in which I conclude, the way in which I evaluate my sufficiency and appropriateness in the audit evidences cause this particular detection risk, that is failure from the auditor's perspective, auditor's point of view. So in order to identify and assess this particular risk of material misstatement, and also to reduce this particular detection risk, thereby reducing the overall audit risk, that the possibility of auditor going and providing an inappropriate opinion should always be tried to be reduced. And what is the guidance that is provided under the standards here? Standards provides a beautiful formula for this. There is something like 2 in the mind and 3 in the fingers formula to be followed, 5 aspects to be complied with, so that I will be in a position to ensure this particular audit risk is minimized, ensure that I am providing an appropriate audit opinion. All these standards on auditing talks about this particular point alone, where the 2 in the mind, which is a constant factor, is always, irrespective of the type and nature of the entity, the 2 constant factors that will be driving the entire audit will be auditor's professional judgment and professional skepticism. Making an informed decision with regard to the course of action based on the knowledge and experience that is acquired, and also based on the procedures that is performed by the standards, accounting as well as auditing, will be treated as making a professional judgment here, making an informed decision. And the professional skepticism is the attitude of an auditor, which is having a 3 inbuilt qualities: having a questioning mind, being alert to conditions that could indicate possibilities of misstatements through errors and frauds, and the third one is critical assessment of audit evidences. There are 3 important parameters as a quality of an auditor is given under professional skepticism here. That is nothing but having reasonable care and caution. In order to prove that I have taken reasonable care and caution in a particular audit, I need to prove that I have taken this particular professional skepticism. I have exercised this particular professional skepticism. What is this professional skepticism? I repeat, where having a questioning mind, it is not a suspicious mind, it's just a questioning mind that the auditor will be having as an attitude. Number 2 is critical assessment of audit evidences that are available with me. And number 3 is being alert to conditions that could indicate possibilities of errors and frauds. The moment that during the course of certain other verification, I come across there are internal control weaknesses, or I suspect that there could be a fraud, I need to extend my audit procedures, and then I need to go for a revised audit process. In that particular case, will be part of my professional skepticism, will be a constant 2 factors that is to be applied. And based on the type of entity and the organization that I'm going to do an audit, 3 variable factors will also come into play for the auditor. The 3 variable factors that is to be discussed by the auditor here is, sorry, there is a power fluctuation. The 3 parameters that will be evaluated by the auditor with regard to the type of the entity will be identifying and assessing the risk of material misstatement by understanding the entity and its environment, including its internal control. And after making this particular identification assessment, I need to make responses to this particular assessment by way of my audit procedures. That is the second point: obtain sufficient appropriate audit evidence about whether material misstatements really existing is there or not, through designing and implementing appropriate responses to the assessed risk. And thirdly, I need to go for conclusion and then express my opinion here, form an opinion on the financial statement based on the conclusions drawn from the audit evidences obtained. So here the 3 variable factors that I am talking about is, first I need to assess the problem based on my assessment, something called as risk assessment procedures, RAP, to be performed by the auditor. Based on that particular assessment, I will be going and making my audit procedures in such a way that I am making responses to the assessed risk here. Based on the risk, my responses will be made. my risk is something huge, my responses will also be elaborate. On the other hand, the risk is less, my responses will also be less. So by way of my responses, automatically the verification process will be performed by the auditor, through which the audit evidences can be obtained, and then that will be the base for forming his audit opinion here. Sir, how this particular understanding the risk of material misstatement will help? There is one specific essay, essay 315, that talks about how to identify and assess the risk of material misstatement here. How you will be evaluating this particular inherent risk, how you will be evaluating this particular control risk, how internal controls of a particular organization can be evaluated, what are all the components to be evaluated. There are 5 components to be evaluated. All are discussed in a respective essay here. Basically, the first point, identification of risk of material misstatement, is discussed in essay 315. The second point with regard to the responses to the assessed risk is discussed in essay 330. And lastly, forming an opinion and expressing that opinion based on the audit evidences is discussed in essay 700, 705, as well as in 706 here. So all are interrelated essays that we need to go and have this particular process applied and then document the same and then to proceed for this particular audit here. For all this, audit evidence is considered to be the base and backbone for the auditor to form an opinion and express that opinion. Without audit evidence, the auditor may not be in a position to form an opinion, and thereby he may not be in a position to express an appropriate audit opinion. Thereby, the objective of an audit is to be reached properly here. Let us understand this particular 500 in a technical way. What does this particular essay talks about? And what are all the requirements that the auditor has to comply with in order to go and comply with this particular essay 500 here. It talks about audit evidence. What is this? What do you mean by audit evidence? Basically, it's a normal known definition here. Audit evidence is any information that can be used by an auditor in arriving at the conclusions on which my opinion is going to be based on. So entirely, my opinion shall be only based on my audit evidence. And how that particular audit evidence should be as per standards, it shall be sufficient and appropriate so that it is enabling me to form an appropriate audit opinion here. Audit evidence includes both information contained in the accounting records and also other information here. It is not only confined to those information that are restricted in the financial statements, but also even other evidences can be part of my audit evidence. It can be oral, it can be visual, or it can be even a documentary form, where not only the financial data or a financial statements related information. Say, for example, there is a regulatory change that is going to happen, or there are government policies that are getting changed. It is nothing to do with my financials, but still that particular information or that particular policy can be treated as an audit evidence for the auditor to go and form and have an impact on the audit opinion that is to be processed here. This is one of the important definition that is discussed in SA 500. There is one another very important definition has been discussed here, something called as management's expert. Who is a management's expert? Who is an expert first of all? And then what is the role of this particular management's expert? As you all know, being chartered accountants, I may not be an expert in every area where I am very good at accounts, audit, finance related areas. There are technical areas which may be out of the ambit. So in those cases, there may be a person who will be treated as an expert who is having technical knowledge in areas other than accounting or auditing, maybe in a technical perspective here. Maybe an actuary or a chartered engineer or someone like that, or a valuer will be treated as an expert in this regard. If at all that particular expert's work is used by the management in helping the management in preparing the financial statements, and the financial statements have been prepared with the help of that particular expert's work, then that particular expert will be treated as a management's expert. In our practical auditing, very many areas, these particular experts' work are being used by the management. Say, for example, my gratuity liability, which is based on the actuarial valuation, or my inventory valuation, or at times technical valuation, even in a bank. Say, for example, I'm going for a bank audit where a jewelry loan is being processed. In that particular case, management, that is the bank, uses the experts' work, that is the appraiser's work, where there will be a person who may not be part of the management, but maybe an external person who is having technical areas, who is having technical knowledge in areas other than our accounting or auditing will be treated as a management expert here, who can be an individual or an organization possessing expertise in a field other than accounting or auditing, whose work in that particular field is used by the entity to assist the entity in preparing the financial statement. It is need not the entire financial statements has to be prepared using his assistant. A component, say for example, the valuation alone, or inventory closing alone, or WAP determination alone, or a quantum alone, that can be used by this particular management expert work. Then if that being the case, if the management has used the management expert, the role of the auditor in evaluating the same is getting increases many a time. Say for example, there is a litigation, a court case, and then the lawyer comes to a conclusion that we are going to win this particular case and no provision is required in the financial statement, where which the management is also accepting that particular view, where the auditors needs to evaluate this particular stand taken by the management, because it is based on an expert's opinion that the management is going for that particular view, and how far it can be applied as an audit evidence. Because I'm going to accept that the management need not provide any provisions in the financials. If that being the case, how I am going evaluating this particular expert's work, being a management's expert? What is the extra care and caution that is to be taken? Can it be simply relied by the auditor, or there is something extra that is to be performed? If assuming that if I have relied on it, nothing I have done, I have absolutely relied on the experts' work, and the management has also stated so. And a later point of time, there is a huge provisioning requirement that's a huge outflow that's happening. Then it could be even treated as a material misstatement why that particular provision has not been done on an earlier date. If that is the question that is being asked to the auditor, I need to prove with the documentation on what basis I have relied the management stand, on what basis I have concluded with regard to the management's experts work, because I have treated that as my audit evidence here. So the requirements that is given in SA 500 is very specific and peculiar. Whenever the auditor uses the management's experts work also, whenever I am going to treat that as my audit evidence, what extra aspects to be complied with, what documentation perspectives to be complied with is also suggested in SA 500. That is to be very carefully taken note by the practicing professionals, so that they also comply with the same requirement here. There is also someone called as auditor's expert, where auditor can also use such a certain expert, so that I may evaluate here. But the point that is discussed in SA 500 is using the work of management's expert alone. When I'm going to use the auditor's expert, then I need to apply a separate SA. SA 620 will be applied by the auditor to comply with various other requirements here. Yeah, this CARO 2020 also, as I was talking in the beginning, CARO 2020 also is having a new requirement to be reported by the auditor with regard to clause 3.1, property, plant and equipment, where the auditor has to go and answer this particular question: whether the company has revalued its property, plant and equipment, including right of use assets or intangible assets, or both during the year. If so, whether the revaluation is based on the valuation by a registered valuer, and then specify the amount of change. If it is more than 10% being a material aggregate of net carrying value, it is to be given, that particular facts has to be given here. So coming back to this particular discussion, where the revaluation of a plant and machinery has been taken up, where there is an engineer who does this particular revaluation, and accordingly that particular number is used by the entity in preparing the financial statements, where the auditor accepts this particular number, where it will be a use of management's expert. SA 500's requirements has to be complied with. Even CARO guidance note specifically talks about that. The principle stated in SA 500 regarding the use of management's expert shall be applied by the auditor while considering the work done by the registered valuer here. So what are all the extra care and caution to be taken up is also discussed in this regard. Let us go for SA 500. The duties that is specified by the auditor are 4 in number. There are 4 requirements to be complied by the auditor here with regard to audit evidence is concerned. My audit evidence should be sufficient and appropriate audit evidence, number 1. Number 2, what information can be used as an audit evidence? Because sometime back I have told you that the audit evidence can be even oral, the audit evidence can be even visual. My physical verification is a visual evidence, or I may make an inquiry with the CFO, and then he may provide certain information here. That may be through inquiries that I got it may be an oral information, or through vouching I may have some documentary evidence also. what information can be used as an audit evidence? What shall be the source? It can be internal as well as external. If that being the case, which information that is to be used is discussed as the second requirement. And the third requirement is what are all the means that are available for the auditor to select items for testing. It is not how to test it, it is how to select items for testing. That is also discussed in this particular requirement. And lastly, in case of inconsistencies or in case of doubts over reliability of a particular audit evidence, how it is to be resolved further. Say, for example, my internally generated audit evidence, my invoice says something, some other number, the customer's acknowledgement for this particular invoice says something, where it is an externally obtained audit evidence. When there are inconsistencies between the audit evidences that are available, then what further course of action to be taken up by the auditor is also discussed as one of the requirement of SA 500 here. With regard to sufficiency and appropriateness in audit evidences, there are different methodologies that the SA by itself prescribe to go for obtaining it, where the quantity as well as the qualitative aspects of audit evidence to be properly evaluated by the auditor. In one of that particular aspect, the relevance and the reliability of an audit evidence is considered to be very, very important here. How this particular information is relevant to the audit, how this particular information is reliable to this particular audit, whether it is a reliable source, whether this particular information is a reliable information or not, has to be evaluated by the auditor. For that, SA 500 gives 5 beautiful tips or rules with regard to the rules of reliability here. The rules of reliability as stated by SA 500 here are: external evidences are more reliable than internal, as we all know. That doesn't mean that internal evidences should not be relied. Yes, internal evidences can also be relied, provided internal controls are effective. Internal controls plays a very, very vital role in the audit, because I'm not going to express an opinion on internal controls. Never. As a statutory auditor of an entity, I never express an opinion on internal controls. Maybe as a part of my 143 requirement, I may be reporting on internal financial controls with reference to financial statements, but not on internal controls. However, even though internal controls, I'm not going to express an opinion, the study of the internal control system and its performance and its effectiveness is very, very important for the auditor, because my internally generated evidences can be relied if internal controls are effective. On the other hand, if internal controls are ineffective, more possibilities of errors and frauds and misstatements could be there, thereby making my internally generated audit evidences may be futile, may not be relied upon. Also, my inherent risk in the audit risk component, the possibility of the internal control failures, thereby errors and fraud sitting in the financial statement, is also high. So considering these both aspects, the auditor will be definitely evaluating the internal controls, mandatorily has to evaluate the internal controls. SA 315 very specifically talks about internal control perspective. So the rules of reliability talks about internal evidences can also be relied if internal controls are effective, where the auditor has to evaluate whether your internal controls are effective or not as a part of my audit process. And audit evidences is more reliable when it exists in a documentary form rather than a other media, and also whether paper or electronic or any other medium. If it is in a documentary form, it will be more reliable than oral or a visual audit evidence here. Original documents are more reliable than photocopies or scanned copies. And lastly, audit evidences that are obtained directly by the auditor are more reliable than obtained through any other source. Even that's why your external confirmation process is made in such a way that the management will be sending this particular inquiries, and then the responses will be automatically received by the auditor directly. That being this particular case here, evidences obtained directly by the auditor are more reliable than obtaining through any other source, including through the management here. So relevance and reliability always plays a very vital role with regard to an audit evidence. And the third this particular requirement, which talks about relevance and reliability, is also giving the parameters to be evaluated by the auditor when external expert is being used by the management. When the management's expert work is also involved in preparation of financial statement, and the auditor is going to rely upon that particular work, what extra caution to be taken, what extra documents that I have to go for it. While performing the audit procedures, the auditor shall always consider the relevance and reliability. When the information produced using the work done by the management's expert, what extra additional work to be done are three in number. One is evaluate the competency and objectivity of that particular expert, whether he is really an expert, is competent enough to do this particular activity, because that's going to be my audit evidence. Where he is not a competent person to do this particular valuation, I may not rely that particular work as the audit evidence here. So whether he is really competent enough, what's the objective for his appointment, and obtain a gross understanding of the way in which he has calculated and the performance that he has made. I need not be knowing technical understanding of it, that being a technical area, I am not aware about it, but still a gross understanding of the way and the assumptions that are being followed by that particular expert should be evaluated by the auditor. And lastly, is it appropriate to be used as an audit evidence or not? Like that, I need to go for an evaluation. Three specific evaluation to be taken up. All these three has to be documented very precisely. Exactly, this will be a problematic area, because management many a times where there are huge judgments is involved, or there are huge litigations, or where there are a lot of ambiguity that could be involved, they may take an opinion and then they may apply, and then they may convince the auditor also, where we may be convinced, but at a later point of time, in order to prove that, on what basis you have evaluated, why you have relied that, what happened to your questioning mind with regard to the professional skepticism, when those questions have been asked, the auditor has to substantiate with this particular documentary evidence, where SA 500 very clearly says when the management's expert is used, these three parameters has to be applied with. Without obtaining it, where I have done anything else, may not be a compliance of standard, I may be slipping out. So please ensure that these are all evaluated and these are also documented parallelly, because very many areas the management's expert work will be used by the management here. On the other hand, without having the management's expert entity by itself prepares the financial statements and then proceeds further, then verify for the accuracy and completeness of the data and the information and disclosures, evaluate the sufficiency and appropriateness, including the presentations to be evaluated by the auditor here. And the third requirement of the essay that talks about the means that are available for the auditor to select items for testing. There are three means that are available for the auditor. One is 100% selection, which may not be possible in a direct audit case, in a practical case. In certain areas, that auditor will be going for 100% verification. Say, for example, statutory compliance, PF payments, or TDS payments, or foreign exchange transactions that involve accounting. All these are all the areas where usually the auditor may go for a 100% verification, including substantial related party transactions like that. There are certain areas, a risky area or a materially misstateable area, where the auditor go for a 100% verification. And specific selection based on a value criteria or based on a peculiarity with regard to a transaction, the auditor may go for a specific selection and then to perform the audit. And usual way of verification, audit sampling, which is also a very permitted, well stipulated means that is available for the auditor, where I may even go for sampling and then I may make a population and then conclude about that particular sample and have a conclusion about the population by itself, which is exclusively discussed in SA 530, which talks about audit sampling. So say for example, the auditor has taken only a sample verification and then he has concluded the audit and then given an opinion. At a later point of time, had you verified 100%, you would have gone for a different conclusion. So you are grossly negligent. So the auditor has not exercised professional care and caution, like that. Whether there can be a situation that can arise, answer is no, provided I have taken audit sampling and then I also have complied with SA 530's requirements. That will be the key. Please understand, these standards on auditing always will be coming for our rescue. There is no other person to go for rescuing this particular auditor when it is a case of disciplinary mechanism. The only person that will come for our rescue is standards on auditing and documentation. These are all the two doses of our vaccination that I usually used to say. The only two boosters or two doses of vaccination that is available for us is standards on auditing compliance, and documenting the same that I have complied with will be our vaccination document. So when I am in a position to prove that I have taken the requirements of SA 530, there will not be any problem at all for the auditor, even though I have gone for a sample verification here. And the last requirement about SA 500, which talks about the inconsistencies between one audit evidence and other audit evidence. What SA suggests is I need to extend my audit procedures. In a case when I identify there is a problem, when my corroborative evidences are not proper, or the audit evidences are conflicting of nature, or I feel that there are doubts over reliability of a particular audit evidence here, in such a case, I need to extend my audit procedure to resolve the conflict, where after my extending audit procedure, I may be having the audit evidence and accordingly I may conclude. In a remote possibility, even after extending my audit procedures, even go for a deeper verification, I am unable to conclude about this particular audit evidence. In such a case, you need to evaluate whether is it material item on which you are going to seek the evidence or not. If it is material, then I am not having sufficient and appropriate audit evidence. In a case where I am not having sufficient and appropriate audit evidence, if it is material, considering the financial statement as a whole, I may not be in a position to go for a clean opinion. I need to necessarily go for a modified opinion only, either to go for a qualified opinion or to go for a disclaimer of opinion only. That is considering the pervasiveness and considering the audit evidence and materiality that is involved here. So my entire form of audit opinion, whether I need to go for a clean, whether I need to go for a qualified, whether I need to go for an adverse or a disclaimer of opinion, all are absolutely dependent upon this particular sufficient and appropriate audit evidences, which actually enables me to form an opinion and thereby express that particular opinion here. So the sufficiency and appropriateness in audit evidences, as stated by SA 500, forms to be very, very important and critical here. The documentation perspective that has to be specifically done as per SA 500 here is compliance of SA 500, how I have done these 4 points, and then audit procedures that are performed by the auditor, including audit plan, program, and all, including the review that is made by the engagement partner, how you have evaluated whether this particular audit evidence is sufficient and appropriate, and the judgments and conclusions that are reached, and the basis for reaching that particular judgments and conclusions should also to be documented here. When it comes for documentation, SA 230 exclusively talks about this particular documentation requirements. One of the important requirement of SA 230 is an experienced auditor criteria. An experienced auditor criteria is a peculiar discussion that is made in SA 230, wherein the auditor shall prepare the audit documentation in such a way that if it is given to an experienced auditor who is not associated with this particular audit, he should be in a position to understand the way in which audit has been planned. He should be in a position to understand the way in which audit has been performed. He should be in a position to understand the way in which the conclusions are reached and the expression of an opinion. So in such a way that I need to go for a documentation. That is, in simple terms, my papers should speak, and it's not I need to go for an explanation. The experienced auditor criteria should enable the person who verifies or the person who goes through this particular audit documentation should enable, so that the process of the audit taken and the conclusions that are reached, the compliance of the various legal and regulatory requirements that are to be made by the auditor are to be taken care here. Even NAFRA, nowadays, they don't want any other data from you. The letters that are being sent by the NAFRA is very simple. Please provide my audit documentation file. That's it, one line item. Say, for example, in case of a GST assessment or a service tax assessment or an income tax assessment, they will be sending an entire annexures. You need to prepare this statement, that statement, like that, and then n number of annexures will be wanted for their audit purposes. But NAFRA doesn't want anything in this regard. NAFRA does want only one particular file. You send your audit documentation file over. It may be in a physical form or it may be even in an electronic form, which is all permitted here, and which should be all comprising of, which should be all enabling that experienced auditor criteria here. So documentation is also placing a very, very vital role for the auditor to prove that he has taken reasonable care and caution to substantiate that the audit was performed only in compliance with the relevant standards on auditing that is applicable for that particular scenario here. With regard to SA 501 is concerned, which is about audit evidence on the specific considerations to be looked into. Generally, entire 500 series talks about general audit evidences to be obtained, and then what are the various impact to be taken care. Say, for example, in case of 550, with regard to related party transaction, how it is to be verified. In case of 560, with regard to subsequent events, how it is to be verified. In case of 510, with regard to opening balances that are there, which is previously audited by another auditor, in case of an initial audit engagement, how it is to be verified. With regard to consistency of the accounting policies to be applied, how it is to be verified. Like that, it will be on a generic perspective. But SAS 501, as the name denotes, it is specific considerations. What are the specific considerations? SA 501 exclusively talks about 3 specific considerations with regard to an audit. The existence and conditions of inventory, the completeness of litigations and claims, and the segment information are the 3 specific areas to be evaluated and to be obtained as an audit evidence, and the guidance is provided in SA 501. It doesn't talk about anything else other than these 3 particular points. So inventory verification and the role of the auditor in this, and the litigation evaluation, how the litigations and claims, which is always contingent upon, which is always a very subjective in nature, how it is to be evaluated by the auditor, what documents to be saved, and lastly, with regard to segment information, how it is to be considered for. With regard to segment information is concerned, how segment information is presented, SA 501 does not give any peculiar procedure or formula. It just verify whether financial reporting framework has been complied with. That's it. No more further verification. My financial reporting framework on a particular applicable financial reporting framework of that entity, say for example, maybe AS or Ind AS, whatever may be the applicable financial reporting framework, the accounting standards requirement are to be complied. That's it. No more further verification of audit perspective is concerned. But however, for the first item and second item, with regard to inventory and with regard to litigations and claims, there are specific guidance that is provided under SA 501 here, which is very important. With regard to inventory is concerned, many of the financial statements, the inventory, role of inventory will be very vital, will always be treated as a material component for many cases. In a case, say for example, inventory by itself is not applicable to the entity, I don't bother about. Say for example, I am a software company, I don't maintain inventory at all, there is no problem. On the other hand, predominantly all other companies will be having an inventory impact, and the responsibility with regard to physical verification of inventory always lies with regard to the management. Basic responsibility is with the management only. Auditor's role is also suggested in this particular SA 501. Even though it is the management's responsibility, auditor shall be physically present at the time of physical verification is what this particular 501 suggests for. In case of inventory verification, auditor to apply the principle enunciated in SA 500 as well as 501, because 500 talks about general audit evidence. Even say for example, observation is one of the method, or physical verification is one of the method that is stipulated by SA 500. I may be in a position to do the same, and also SA 501's compliance. With regard to physical verification of inventory, again CARO, I always take the reference from CARO 2020 because it is going to be very important and crucial for the auditor to report. It is no longer I may be doing for the usual verification methodology. No, there are certain severe questions have been incorporated. The responsibility of the auditor under CARO 2020 is something enormous. Under CARO 2020, the clause which talks about inventory, whether physical verification of inventory has been conducted at reasonable intervals by the management. So it's the responsibility of the management to conduct the physical verification, but whether it is at reasonable intervals or not, and whether in the opinion of the auditor, the coverage and the procedure of such verification by the management is appropriate. This is actually a new clause that is to be included. Previously, this question was not there. The coverage and the procedure of verification by the management, is it appropriate or not? Considering the size and complexities involved, considering the nature of the inventory that is being verified, the auditor has to go and have an opinion about whether the coverage and the procedure of performance of verification by the management is appropriate or not, has to be evaluated. On what basis I have evaluated? Document. That's very important here. Whether any discrepancies of 10% or more. Under previous CARO 2016, the question was very simple. The question was whether physical verification of inventory has been conducted at reasonable intervals by the management, and any material discrepancies identified. If it is so, how it is dealt in the books of accounts. That's it, over. But however, now the materiality levels are also prescribed by the CARO 2020. Anything more than 10%, The materiality where the auditor fixes it with regard to inventory is immaterial for the CARO reporting. CARO reporting says 10% or more in the aggregate of value of that particular inventory. If it is there, then it will be treated as material, then it is to be reported. So you go with the number and new reporting requirement here, whether they have been properly dealt with in the books of accounts with regard to such discrepancy between the books and between the physical, whether it has been properly dealt or not, is to be reported by the auditor here. So coming back to this particular inventory, considering CARO reporting requirements and also SA 501 requirement, physical verification shall be performed by the management. Auditor has to have documentation that whether the management has performed and the observations of the management, including the discrepancies that are obtained and the manner in which the same has been dealt in the books of accounts, should also to be having as a verification part, as a part of CARO reporting here. The procedures to be followed by the auditor with regard to SA 501 is concerned. The auditor shall be present at the time of stock taking wherever practicable. In case of a remote possibility, in case of external or a difficulty that is faced by the auditor, at times there may be a different date on which auditor can be in a position to perform the physical verification. Usually the auditor shall also be present at the time of stock verification, observe the procedure performed by the management, either through myself or through the articled assistant, through the audit team, engagement team may also be there. What is the manner in which the procedure to be performed? Because different types of entity, different inventories will be there and the procedures will be different. Say for example, in a crude oil company, the procedure of verification will be different. In a manufacturing entity where there are components, the accounting physical verification will be different. My WAP verification will be different. So there are different perspectives that are involved, and the manner and procedure of inventory verification shall be exclusively dependent upon the type and complexities that are involved. So the auditor and the audit team has to observe what is the instructions that are given to the management and how the management is verifying the same, inspect the inventory and also perform test counts. Wherever required, I may even go for a test counting of that particular verification. Verify the estimations of the management, including WAP estimation, slow and non-moving items verification, and all are crucial part of my inventory verification process here. Because many places there may be estimations that could be involved here by the management. My closing stock may be estimated one, may not be a physically tallied number. Say for example, a oil tank on which the oil is stored, the entire tank will be there, and the valuation of the same or the closing stock of the same, the quantum of the same can be based on an estimation, maybe through automated softwares, or maybe through a dip method or through a laser beam method. Like that, I may be going for different methodology which is an estimated number. Even a WAP may be on an estimation basis. The WAP 1, WAP 2, the stage of completion could be on an estimation basis. Say for example, my construction, assuming that the client is in a real estate company where they are into promoting the builders and then they go for it, the valuation will be based on the percentage of completion, which is again an estimated one, where there are possibilities of middle misstatements, especially when the judgments and estimates are high. It also creates the inherent risk in this particular regard. The auditor has to understand the basis of that and then evaluate the reasonableness of the same. And with regard to slow and non-moving items, there are a lot of other risks that are also associated with regard to valuation. Say for example, there is no movement on the inventory at all. The opening stock remains same as it is. The management contains the opening stock and the closing stock are one and the same, sir. No movement. So nothing to be verified. No, that will be a risky area. Here it is mandatory to be verified. Why there is no movement at all, first of all? Then what will be having the impact on the inventory valuation, the value that is to be carried? The auditor has to evaluate, is there a possibility of pilferage, the further usage of that particular material? All that can be a process to be verified, evaluated, to be documented also. For everything, materiality will be a base, that is constant factor. If it is material, then only I will be worried on that. If it is not material, I need not bother about it, because SA 200 very specifically says about that. SA 200 says The auditor is not responsible for not detecting an item which is not material considering the financial statement as a whole. So considering the financial statement as a whole, whether a particular component is going to be materially impacting or not to be evaluated. For that evaluation, SA 450 can also be applied by the auditor, which talks about evaluating the misstatements that are obtained during the course of an audit year. The auditor shall also apply cutoff procedures with regard to closing, opening transactions and all. This will also help the assertions to be validated, like an occurrence, the completeness in recording, the measurement. These are all the assertions with regard to transactions that are provided by the management that can be evaluated by the auditor. And lastly, I need to obtain sufficient and appropriate audit evidence here. Apart from it, there are specific requirement of SA 501, as I told you, with regard to inventory. I'm just talking about requirement of SA 501 with regard to inventory is concerned. Attendance at physical verification is mandatory unless otherwise it is not practical for the auditor to be part. When the physical verification is conducted at a date other than the date of financial statement, the management should disclose the reasons for the same to the auditor. Say, for example, past 2 years, because of the COVID pandemic impact, there are lockdown restrictions. March 31st, it was a complete lockdown. So in such a case, where the verification is not in a position to be performed on a stipulated date, on the date of financial statement, maybe we are performing on an alternative date. In such a case, the reasons for the same has also to be documented. Alternative procedures shall also be performed by the auditor if at all I was not at the time of taking the physical verification. Say, for example, the subsequent sale of that particular inventory is a valid evidence that that particular inventory was there available on a given date, that is on the balance sheet date here. Or there are also practical situations that could arise that inventory may be under the custody of or control of the third party. Say for example, I might have sent my inventory closing stock or my raw material to my subcontractor, which is in a process. As on 31st March, the stocks are lying with the third party. Or even I might have sent to my goodowns, it may be in transit, it may be under the control of the transporter. In such a case, the auditor may be going for different alternative methods that can be performed. I may go for request information from the party with whom that particular inventory is vested with, or I may even perform an inspection in that particular premises and then get it confirmed, or subsequent confirmation that the items have reached the destination may be evidence that could be available, or even I may be in a position to use SA 402 or SAE 3402, which is with regard to a specific organization which uses the control organization where a service organization which actually helps this particular entity here. Say for example, my stock is there with the other entity, maybe say for example subcontractor. In that case, if the contract permits the principal entity's auditor to visit the subcontractor's premises, verify the same, very good, no problem, I might have verified. Or the auditor feels that I may get a confirmation from the subcontractor, yes, that's also possible. And the third one is, I may take a confirmation from the auditor of that particular service organization as stipulated by SA 402. Wherever there are service organizations are getting involved, and then the auditor can go for that particular type 1 report or type 2 report. There are two types of reports that can be provided by the service organization's auditor, which will be used by the reporting entity's auditor here as a part of SA 501 also. When attendance at physical inventory is impracticable in a case, SA 501 discusses this particular point. Also, the COVID advisory that is issued by WASB also contains this particular specific provision here. At many times, auditors' attendance at physical inventory counting may be impracticable. Factors such as nature and location of the inventory, example where the inventory is held in a location that may pose threats to the safety of the auditor, or there are regulatory requirements that there are lockdowns, or the matter of general inconvenience to the auditor, all this is not a sufficient reason to skip this particular physical verification process at all. Where the matter of difficulty, time or cost involved is not in itself a valid basis for the auditor to omit an audit procedure here. Alternative audit procedures can be applied by the auditor here. In one of a seminar, an international seminar where we participated, where a person from Canada participated. He was suggesting about the verification of livestock. In their country, the physical verification of livestock will be done through a device like a camera or a drone camera, where that may be sent, and then they may be taking up the count, and then accordingly they may take up. Or thanks to technology that we have visual controls, or we have through virtual conferences also, there is possibility for the auditor to participate in that. So that may be an alternative methodology that can be applied by the auditor so as to have evidence for the auditor. And I may not be in a position to entirely ignore the process of physical verification, which is considered to be very, very important for the entity materiality is concerned. Documentation aspects, what are all the documents to be obtained by the auditor, or what is to be documented with regard to inventory is concerned as a part of SA 501. The extent of coverage of physical verification with the value. Why? Because, see, please understand here, with regard to a CARO also, it talks about the coverage and the procedure of such verification by the management. Is it appropriate or not? Without the coverage, or without understanding the procedures that are actually performed by the auditor, I may not be in a position to report on this particular clause also. Apart from it, as per SA 501 also, I need to go for reporting. So the auditor has to necessarily document this particular extent of coverage of physical verification with the value, to what extent that they have covered, and whether substantial portion, whether is it reasonable or not, to be examined by the auditor. And also the instructions by the management to the staff, and also instructions to the auditor by the auditor to the engagement team shall also be to be documented. How management has instructed to their staff, and how auditor has instructed to their staff with regard to verification process, verification methodology, all to be documented here. Inventory physical verification sheets that are duly authenticated by the entity. Say, for example, physical verification may be performed, and then the audit team may be making a note of what are all the physical stocks that could be available. At the end of the verification, it is to be duly authenticated both by the audit team as well as by the entity here, the authorized personnel of the entity, so as to substantiate that this particular time, this is the stock that was available here. Again, to have the book stock, very importantly, I need to have the extract of the copies of the books of accounts, because there is a very high possibility of amendment in the books, manipulation in the books, that could also be possible here. That's why the MCA new requirement with regard to audit trial also to be involved in an audit software and all, or accounting software and all, have been included, but it has been postponed. The implementation has been postponed for another 1 year's time. But the point is, where there are possibility of amendments to the financial statements here. So as a part of my documentation, the auditor has to have the extract of copies of the books of accounts or the inventory ledgers and reconciliation statements, so as to substantiate this is the book stock, this is the physical, and this is the variance. So in case of material variance discrepancies, how it got adjusted, how it got accounted, and is it anything to be reported even under CARO to be evaluated by the auditor here. Material discrepancies identified, and then action taken for resolving such material discrepancies or adjustment in the books of accounts, all part of documentation to be exclusively made by the auditor with regard to inventory is concerned, as per SA 501 here. The next item as per SA 501 is concerned, we have litigations and claims, where even under Companies Act, even under Companies Act, we have certain reporting matters. One of the reporting matters by the auditor under 143.3 is disclosure of impact of pending litigations on its financial position. Pending litigation are always a great concern for the auditor, because it is something contingent, where I may not be in a position to exactly evaluate its outcome. So it will be the management's estimate that will be playing a very vital role in auditor understanding the same. But however, there is a specific question to the auditor: disclosure of impact of pending litigations on its financial position has been made by the entity or not. So first of all, I need to have the list of those pending litigations and its impact, its outflow, and the impact on the accounting, and also the accounting treatment that is specifying the various accounting matters, and the same whether it has been disclosed properly or not to be evaluated by the auditor here. With regard to litigations and claims is concerned, or pending litigations are concerned, unless or otherwise the management comes and explains and informs, that particular information may not be rightly available to the auditor. However, there are very many ways, alternative means also available for the auditor to take that particular information and then to evaluate appropriately. The sources of information for such data will be through the P&L expenses ledger, maybe legal expenses, consultancy charges, or litigation charges like that. I may be in a position to scrutiny the general ledger, and then I may inquire the same, and then I could get about the litigations and its impact. Or also there is a possibility of discussion with the in-house legal department. Large corporates may also have a in-house legal department available. I may be in a position to have a discussion with them, get a confirmation from them, what are all the old cases pending, what are all the new cases that got instituted during this course. Like that, I may be having that information also here, discussion with the in-house legal department. Or maybe board minutes or committee minutes with regard to the discussion. Risk management committee might have discussed, or the board of directors might have discussed these particular cases. Usually an MIS statement will also be prepared by the management to be submitted to the board, like list of cases that are pending, and then the further developments that are happened during the quarter, and the new cases that got filed, or suits that got resolved, or the cases that got order has been passed. Like that, they may be having the information here, and its impact and the outcome can also be taken out. So this particular sort of MIS information will be very much useful for the auditor to go and get a source or get a data about that particular litigation and claim, or even correspondence with the lawyers. May not be having an in-house legal team, maybe having external counsels here. In that case, the correspondence between the client and the counsels will be of help for the auditor to come about that particular case, its potential impact on the financial information here. The direct procedures that are stipulated with regard to litigations under SA 501 are: obtain a direct confirmation from the lawyer with regard to the list of litigations and its outcome. So it will also be treated as an external expert, the work done through an external expert here, that is permitted. Or in case meet the lawyer directly in case of significant risk, or when there is a disagreement between the management and the lawyer. This is also possible, where the management is of a different view and the lawyer is of a different view. When there is a disagreement between these two, I may be in a position to directly meet the lawyer to know about the outcome, to know about his particular views and its impact on the financial position. Obtain a management's representation also with regard to proper identification, accounting, and disclosure. These three are very relevant and important, not only for litigations but also in related parties. Both have a common sequence: identification, accounting, and disclosures. Identification of litigations, what are all the case, how you are consolidating the same, how you are getting to know about it, how the management is having the system to obtain that particular information. Identification, accounting, as well as disclosure wherever that is required as per the accounting financial reporting framework here. In case of incomplete information, where the management doesn't provide the required data, or the management doesn't permit access to the lawyer, or the management is restricting me from getting the information in this particular regard, considering the materiality, I may even issue a modified opinion here, because it creates a restriction in the scope of audit. Predominantly, I may even go for a disclaimer of opinion in this particular case, wherever the information is not sufficiently explained here. That is with regard to SA 501 with regard to litigations is concerned. And now we are moving towards the next standard, that is about SA 505, that talks about external confirmation here, which is external confirmation, where I have given a picture of positive and negative. Where usually there are two types of external confirmation as stipulated by SA 505. We have something called a positive confirmation. We also have something called a negative confirmation. So for the past 2 years, positive is the most negative word that we have heard, but thanks to the medicines and also to the people and the external factors, that slowly we are coming out of this particular pandemic impact. But what is this positive confirmation? What is this negative confirmation? First of all, why external confirmation is required? What do you mean by the same? Again, as a part of evidence obtaining activity, external confirmation is a very good piece of document. Through that, I will be in a position to have an opinion here, being a audit evidence. What do you mean by external confirmation? Audit evidence obtained as a direct response to the audit. So, as I told you some time back, it will be a direct response that is obtained by the auditor here. Where who will be sending this particular confirmation? As we all know that it is not the auditor who will be sending the request. It will be the entity. It's a triangular transaction that could happen, where the management will be making the external confirmation request and then to their customers or to their parties, and that will be directly confirmed by them to the auditor here. Audit evidence obtained as a direct response to the auditor from a third party, the confirming party. Because sometime back in the rules of reliability, we have seen evidences that are directly external evidences are more reliable than internal, one point. And lastly, audit evidences obtained directly by the auditor are more reliable, the second point. And also audit evidences that are in a documentary form are more reliable. 3 points that we have seen. All these 3 points will come and fix exactly on this particular external confirmation request, where it is an audit evidence obtained as a direct response to the auditor from a third party in a paper form or by electronic or by any other medium. Say for example, bank balances. Though bank balances doesn't have this particular triangular way of communication, it will be a certificate that they will be providing it. Bank balances or a debtors confirmation or creditor confirmation or stocks or even other assets that are held by third parties, all will be part of my external confirmation. Sometime back, even in SA 501, I told that with regard to stocks which is held by the subcontractor or the job worker may be obtained through an external confirmation, it will be a part of SA 505 only. With regard to the types of external confirmation requests, there are 2 types of external confirmation requests. One is positive confirmation request and the other one is negative confirmation request. That's why I told you positive and negative. What is this positive confirmation request and what is negative confirmation request? It's actually a design of the request letter by the management. In a positive confirmation request letter, the management will be appealing to the confirming party that whether the balances are matching or not matching, please respond. That's it. That is something called as positive confirmation request. On the other hand, in a negative confirmation request letter that is being sent by the management to the confirming party is, if at all the balances are matching, you need not do anything, you please keep quiet. On the other hand, if the balances are not matching, then you respond to our auditor stating your balance. Like that, they will be making the request confirmation letters. When you compare with positive as well as negative confirmation request mode, the negative confirmation request is more dangerous for the auditor because it provides less persuasive evidence to the auditor. Why? Because inaction by the other party will be treated as a confirmation. So the auditor has to guide the entity, guide the management while drafting this particular confirmation request, that you should be only on a positive confirmation methodology and not on the negative confirmation methodology. At times, when the balances are low or when I have a confirmed assurance that the other party will mandately respond, like that if at all I make a hypothetical assumption, or I am very sure that my internal controls are very high so that the possibility of my books and records are going wrong is very, very less, or when I feel that the error rate is expected to be very, very low, in these circumstances I may go for a negative confirmation request. Otherwise it will be always a positive confirmation request that is to be sent by the auditor here. The response from the confirming party, whether they agree or disagree with the information requested, will be of a positive confirmation. The negative confirmation response only if the confirming party disagrees with the information requested here. At times, this is a newly developing area, use of third parties to coordinate and provide responses here. The usual way of correspondence will be management will be communicating directly to the party, and then party will be communicating directly to the auditor. Nowadays, with the advent of information technology, what happens is there will be a third party coordinator who will be providing the data. Say for example, I am a banker, State Bank of India. I may have a third party with a contract, and then any request confirmation letter to State Bank of India will be made through this particular third party. Say, for example, a service provider who will be giving this confirmation on behalf of this particular State Bank of India. So there are possibilities that the use of third parties to coordinate and provide responses in such a case, where SA 505 also permits that particular mode, basically, provided there are certain cautious aspects to be taken care of. If a confirming party uses a third party to coordinate and provide responses to confirmation requests, the auditor may perform procedures to address the risks that the following risks. There are following risks are available. The third party on their own, they may provide information, or at a later point of time, the confirming party may disown the responsibility in this particular regard, or the data, the validity and the control of the data and the tampering could also be a possible risk here. So if at all auditor is having satisfaction with regard to the following risks, that the response may not be from the proper source, or a respondent may not be authorized to respond, and the integrity of the transmission may have been compromised. But these risks are there always. If these risks are addressed properly and the auditor is having satisfaction that these risks are not manifested, then that particular item can be used as an audit evidence. Yes, it is permitted as per SA 505 and also as per SA 200 in line with SQC 1. So all on a combined reading of all this, that particular third party coordinate can also be permitted audit evidence here. However, the risk has to be obtained properly. Sir, can we have the request letter through an email instead of a physical mail? An email by the confirming party, is it advisable? Is it used? Can it be used as an audit evidence? Answer is yes, provided again it will be the authenticity of the sender, and the transmission protocol is to be taken care by the receiver here. There are possibilities that the management by itself may be requesting the auditor to skip the confirmation process. Yeah, SA 505 is concerned, it is not mandatory that every time I need to go for a confirmation, and also from every party I need to go for confirmation like that. There is no prescription. It is based on the evaluation by the auditor that he needs to decide whether he needs to go for a external confirmation or not, because it is also one of the methodology as stated under SA 500 here. So when the auditor feels that I need to go for a management, when the auditor feels that they need to go for a external confirmation, then in a case the auditor has to choose the parties from whom this confirmation request is to be obtained. It need not be from all the parties here. He may say all the parties also, but most litigative party or most transaction party or no transaction party or most risky party like that, he may choose these parties and then ask the management to send the confirmation letter, and then get the response. He needs to go for a control to how many parties that we have sent the external confirmation request, how many parties have responded, what is the outcome of the same, and then in case of discrepancies, the management has to reconcile the same. There are possibilities of discrepancies will also be there. But now the issue is different, where the management by itself requests the auditor to skip the confirmation process. Skip the confirmation process in a two-way. One is, sir, for this particular party alone, don't send confirmation letter, because we already have a negotiation with them. We have a litigation, and now we are under negotiation. So please don't send a confirmation. If that being the case, it will tamper the negotiation like that. When the management requests the auditor to skip the confirmation, and the auditor feels that it is of a genuine request and it is having a reasonableness, then the auditor may accept the request of management not to send the confirmation letter, and then to may go for an alternative audit procedure to confirm the data here. This is situation number one. Situation number two, sir, I will not be in a position to send confirmation letter at all to any party. You go for a different methodology like that. When the management restricts the auditor, it exactly falls as a restriction in the scope of audit. The auditor may not accept for the same, need not accept for the same if it is not reasonable. Then I need to also consider the effect of SA 260 and SA 705. SA 260 talks about difficulties that are faced by the auditor. There are very many times difficulties that could be faced by the auditor. Even I may go for extended verification, still audit evidences are not available, or the data that is asked for are not provided by the management, or there are inordinate delays in providing the information explanations to the auditor, Like that, there are various difficulties that could be faced by the auditor that are to be consolidated and then to be communicated to those charged with governance and the management level. If at all audit committee is there, I may even communicate to the audit committee as per SA 260, which talks about difficulties to be communicated. And also SA 705 talks about restriction in the scope of audit, where I may even go for a withdrawal, or he may go for a disclaimer of audit opinion. That is possible. Or even I may go for a qualification, except for the confirmation the financial statement reflects true and fair view. Like that, I may even go for a qualification that is again based on the judgment of the auditor, and also based on the sufficiency and appropriateness of other audit evidences that are available, or alternative audit procedures that can be performed by the auditor here. That is with regard to SA 505 external confirmation is concerned. Also, I need to get a management's representation about my confirmation from the other party alone cannot be treated as a conclusive audit evidence. Confirmation from the other party is just a confirmation. It need not be assuring the assertion that it is good and recoverable. It may be confirming party may say, yes sir, I need to pay, but that doesn't mean that it is good and recoverable here. So there is an assertion with regard to receivables that it is all good and recoverable. That is to be evaluated by the auditor only, and then management's representation will also be obtained as per SA 580 in this particular regard. And now we will be moving towards this particular essay, that is something about a going concern, SA 570, which is recently revised and also which is having a huge impact. Before going for this particular essay, shall we go for a break of 5 minutes?
Yes, sir. We can, sir. Just share my screen. And when you're ready, let me know, sir.
Yes, please.
Thank you.
Yes, please. We'll just have a break of 5 minutes so that I'll go for.
Please, sir. Please. 5 or 10 minutes. You let me know when you're ready, sir.
Yeah, thank you.
Sir, are we good to go, sir? We'll have. Sorry.
We are good to go. Yes. Yes.
Just give back the rights.
Whether my sharing is enabled now?
No, sir. I'm giving you the rights back. Can you just now it's enabled, sir. It's visible, sir.
Very good. Yes. Thank you, Silva. Welcome back, dear friends. Thanks for your patience and participation in this particular regard. Now we will be moving towards this particular essay, essay 570, that talks about going concern, which is basically revised. Previously, the going concern essay was different, and after revision, there are huge changes that got made. With the program, please, whatever the queries that you have, please post it in the query box so that all the questions can be taken up separately, and then we will discuss these particular aspects after our brief discussion of the session here. Essay 570 is considered to be one of the most important essay, especially after pandemic, because previously the going concern impact was normal. There is no extraordinary or there is no inordinate fluctuations that is going to happen. So everybody was assuming this particular going concern as a smooth sail activity, where after pandemic that is no longer the case, because it has turned entire economic operations. Many companies got shut down. So the impact of going concern is very, very huge. It has changed the way in which the businesses are operating. So the reporting aspects is also something very, very serious from the auditor's perspective. So understanding this new SA 570 and reporting accordingly and documenting the same is a very, very vital perspective from the auditor here. Let me go in for this particular SA 570, going concern. We all know going concern is just as a fundamental accounting assumption, where as per AS, we need to go and comply with that. If at all this going concern is not followed, it is to be disclosed. Otherwise, it need not be disclosed is what the general thought process in this regard. But however, that is no longer the case. Please understand what do you mean by going concern here as per SA 570. Under the going concern basis of accounting, there makes the change. The entire basis on which my accounting is happening is also it's absolutely based on going concern. So it is a going concern basis of accounting. It is no longer an going concern assumption. It's not only an assumption. It is a basis of accounting on which my entire financial statements are prepared. Under the going concern basis of accounting, the financial statements are prepared on the assumption that the entity is a going concern and will continue its operation for the foreseeable future, at least for a minimum period of 12 months from the date of financial statement is what foreseeable future is talked about. So it is the basis of accounting. If at all this particular basis is not valid, I need to go for a different basis. I need to go for an insolvency mode. I need to go for winding up mode here, where I'm continuing, then only I'm preparing in this particular basis. So my basis of accounting by itself is going concern now. So it is very, very relevant for the entity to evaluate. So the responsibility is only with the management. They need to evaluate whether going concern basis of accounting is valid or not. They need to give the parameters. Because of these parameters, it is valid. Because of these parameters, it is not valid. Like that, the management has to make the assessment, and the assessment made by the management has to be validated by the auditor. So there is a huge responsibility that is happening today with regard to going concern of the entity is concerned. It is considered that the entity has neither the intention nor the necessity of liquidation or closure of its business. That is what something called going concern basis of accounting here is. Where we need to also refer section 134(5), which talks about director's responsibility statement. Even under management's responsibility paragraph under SA 700, we take clue from 134(5), which talks about director's responsibility under Companies Act here. That is nothing but the management's responsibility. The objective of SA 570 is the auditor has to obtain sufficient appropriate audit evidence regarding not only regarding but also to conclude the appropriateness of the management's use of going concern basis. It's not the auditor who is using the going concern basis. It is the management of the entity, those charged with governance. They are using this particular going concern basis of accounting in the preparation and statements. So is it appropriate? Is it valid? I need to evaluate and then I need to conclude. Not only to conclude, based on my conclusions, I need to report also back to shareholders here to conclude based on the audit evidence obtained whether any material uncertainty exists. That's an important emphasized term. Material uncertainty exists relating to events or conditions that may cause significant doubt on the entity's ability to continue as a going concern, and accordingly the auditor has to report in line with SA 570, read with SA 700 here, read with 705 also. So the point here is there is a new technical term that is getting introduced under SA 570, something called as material uncertainty. What is this material uncertainty? What is the character of this particular material uncertainties? What could be the examples of material uncertainties? Understand, material uncertainty is a term that is defined under SA 570, but also under India as it has defined. Material uncertainty means, so it's a means definition, it's not an inclusive definition. It means the uncertainties relating to events or conditions which may cause significant ability to continue as a going concern, that should be disclosed. Very, very relevant and very, very important is that particular material uncertainty is to be disclosed in the financial statement. Those events or conditions that may cause significant doubt on the entity's ability to continue as a going concern will be treated as material uncertainty, which is to be disclosed in the financial statement, and that responsibility lies only with the management, whether it has been disclosed or not, to be evaluated by the auditor. If material uncertainty is there available, going concern is affected, how it is to be reported. Material uncertainty available, going concern is not affected because there are alternative mechanisms available by the management. Mitigating mechanisms have been installed. In such a case, how it is to be reported. When material uncertainty by itself is it to be having an impact on the going concern, like that, there are serious assessment to be taken care by the auditor here. It is very, very subjective and very, very important. We need to have documentation also in this particular regard. What do you mean by material uncertainty? Mere material uncertainty by itself affects the going concern or not? No. Material uncertainty is only causing a significant doubt on the entity's ability, which is to be disclosed mandatorily. But however, existence of material uncertainty alone cannot be a factor that your going concern assumption is lost. No. However, there is a very high likelihood of going concern is getting lost here. So the auditor has to really evaluate whether this particular material uncertainty is manifesting and whether it is creating the impact on the going concern or not. If it is yes, I need to go for a different sort of reporting. If it is no, I need to go for a different sort of reporting here. Exactly, that is what that we are going to have understanding on this regard with regard to SA 570 is concerned. It is also termed as significant uncertainty, but usually we discuss as a material uncertainty only, and both are synonymously used here. What could be that particular material uncertainty? Indicators that could affect the going concern basis of accounting are divided into, as an examples, they have divided into different parameters like financial parameters, financial indicators, business indicators, operational indicators, other indicators like that. We have different examples that are even discussed in SA by itself. Say for example, fixed term borrowings approaching maturity without realistic prospectus for the company to redeem it or to repay it. So say for example, there is a debentures that has issued by the company 10 years back. Now it is to be redeemed back. I don't have realistic money means so that it can be redeemed. It will be a default. Then there are further consequences. It could even affect my going concern because this will lead to a situation where the company is not in a position to pay, and then there is also a possibility of insolvency proceedings in this particular regard. Or adverse key financial ratios. My analytical procedures as per SA 520 that gives me confidence to perform analytical procedures and then to get the ratios, and based on the interpretations of the ratios, the status of the company can be evaluated by the auditor. So key financial ratios are in an adverse way. Excessive reliance on short-term borrowings to finance long-term assets. Exactly, this is a working capital impact. It's a problem creator. Even Caro reporting 2020, there is a specific reporting under this, whether any short-term funds has been used for long-term purposes, whether funds raised on short-term basis have been utilized for long-term purposes. If yes, the nature of the amount to be indicated here. Again, it is an indicator, clear factor that the company is not managing their funds properly. Even Caro, not only under this particular clause 9, there are very many other classes also. The end use of borrowing is being discussed. Whether, say for example, the term loans have been used for the purpose for which it has been raised. I would have raised a term loan for a particular purpose, but I am paying for salary. Then my working capital crunch could be there. It will be a likely indicator of my going concern impact here. All these are all material uncertainties. All these are all indicators. The moment indicators are there, it is a red flag that I need to be very careful and cautious in approaching further. The moment there is an indicator is there, it itself doesn't mean that the going concern is lost. No, your going concern may be still valid, provided the alternative mechanism, the mitigating mechanism that are rightly taken up by the management here. Financial indicator, or there could be substantial operating loss. Even Caro, there is a question on cash loss, whether there is a cash loss during the year and also in the previous year, like that there is a specific question here. But here we are not talking about cash loss, we are talking about substantial operating loss. Again, mere loss is not an issue, because in a business there may be in a year we will be making profits, next year there may be a loss, that next year there will be profits. That's not a point. But here there is a substantial operating loss which could affect the going concern impact, or maybe inability to pay the creditors on the respective due dates. Even again, this we have a Caro reporting requirement, like undisputed statutory dues, disputed statutory dues, whether undisputed statutory dues have been regularly deposited by the company or not. Is there anything that is not regular? Is there anything that is pending for more than 6 months as on the date of balance sheet? Like that, there are different clauses that repeatedly wants the auditor to go for that particular evaluation and to report under Caro. Why this particular aspect is having an impact here? Because Caro reporting alone may not have an impact on your audit reporting, but however, it could be an indicator. It could be an eye opener for the auditor to verify on those lines. My company is not paying the dues promptly under the respective due dates. My TDS have been deducted, but is remitted at a very inordinate delays. So in that case, there may be a possibility of impact that could even have an impact on the going concern of the entity. The auditor has to look into that particular aspect specifically. Loss of a major market, my technology change I have not adopted, or there are competitions, or there are people's customers changes. All this could lead to a loss of a major market, which is also an impact. On the other hand, if at all I have a diversified business, even though this particular market I lost it, I have another market wherein I may be in a position to continue as a going concern, well and good. But however, this particular impact is to be indicated here. Shortages of key raw material, again this was one of the cause for impact based on COVID, where key raw material, say for example I have to import a particular raw material and that alone is being used for my production, that particular imported raw material is not available for me because of lockdown restrictions. I may not be in a position to procure, I am not having alternative mechanism also. That could have an impact on the production, that would have an impact on the entire companies going concern also. Shortages of key raw material, huge labor turnover and labor unrest. This is exactly happened in COVID situation, the COVID wave 1, where a lot of laborers have migrated to their native, and then I don't have a skilled labor with me, so that my production is getting halted here. Huge labor turnover or a labor unrest or wage litigations and negotiation is not feasible. Like that, there are possibilities it could have an impact on the entity shutting down their operations here. Pending legal proceedings and claims from which could be substantial, where there may be a Supreme Court case, and then there are huge penalties that are being imposed on the company. And if at all it is getting confirmed, I may not be in a position to substantiate, I may not be in a position to continue my business, will be having an impact. That's why under 143.3 also, where we have a specific requirement, pending litigation and its impact has been disclosed properly. SA 501 specifically with regard to go for pending litigations, how you have evaluated those pending litigations and its disclosures. All these are all related concepts which may having one another impact, which all help the auditor to go for rightly identifying, rightly having the conclusions and decisions made, and rightly going for reporting also to comply with, so that I am getting protected before anyone is getting protected here. So it is me, first the auditor is to be protected. That's a very important aspect. At many times we are helping the client, we are helping the government agencies, we are helping all other stakeholders, except we are helping us. So in a case where we need to protect ourselves by way of my compliances, by way of our documentation, it is very, very important for us to go for complying. The same here, so that we are getting protected first, and then we are protecting others as well. Non-compliances of a law or a regulation by the entity, which creates a problem for the entity by having a notice or a legal notice or stop of operations like that, that could be a possibility. Non-compliance of law or a regulation, say for example pollution control board or child labor protection, like that, there are very many areas where there could be non-compliances which could have an impact on the entity continuous and going concern here. Or changes in a legal or a law or a regulation of the government also. Say for example, I am a company which is into lottery ticket trading. Suddenly the state government bans my lottery ticket trading at all. So there is no lottery ticket in the country. So my business is getting down. My business is shut down. Pan masala, gudka, like that, or plastics. Say for example, a few years back, the particular type of plastics have been banned in the state. So if at all I am engaged exclusively in that particular area of production, changes in a law or a regulation by the government also having an impact on here. This going concern impact has to be studied even for government entities, government-owned, state-owned entities also to be evaluated here. It is not only for other companies. For a government company, always they are going concern, because they are all supported by the central government or a state government, like that. We may not be in a position to have thought. It is also to be evaluated. They are also under the going concern 570 purview only. Because of this change of SA 570, there is an extended reporting that was happening in SA 700 also. In the auditor's report, there is a revised auditor's report. We need to include certain extra terms in the management's responsibility for the financial statements also. Under the management's responsibility paragraph, the section will include the following new aspects. That is right from the 700 revised. We have this particular paragraph. The management's responsibilities for assessing the entity's ability to continue as a going concern, and whether the use of going concern base of accounting is appropriate, as well as disclosing the matters relating to going concern. All are responsibilities of the management. Sir, when I am saying that it is the management's responsibility, the management has also to confirm the same. That's why in the director's responsibility statement under 134.5, they need to necessarily include this particular aspect also. Apart from this, there are two other ways in which I need to get this confirmation. That is, as the auditor, I need to get the confirmation from the management. One, at the time of engagement letter, SA 210, when I am going to write the terms of engagement, I need to necessarily incorporate this particular clause from the management, get it acknowledged from the management. Without that, I cannot reproduce the same under SA 700 here as a management's responsibility paragraph. So necessarily at the time of SA 210, at the time of engagement letter, this particular aspect is to be included. Not only that, under SA 580, when the directors, when the management's written representations are getting obtained by the auditor at the fag end of the audit before concluding, I need to also get it reconfirmed by the management. All these are all documentary perspective. Sir, when you ask about going concern, you might have evaluated the going concern. Yes, it could be appropriate. But in order to document it, in order to prove that you have evaluated, these aspects are to be complied. These aspects are to be taken care. I want you people to please educate the engagement team also, so that they are also aware about this impact and importance, and then they will be rightly complying with regard to this, so that it will be a compliance for me. So management's responsibilities have to be specifically included under the management's responsibility paragraph. Apart from it, auditor's responsibility are also having a change. Extended auditor's responsibilities here is describing the auditor's responsibility regarding the going concern aspect, that is to conclude on the appropriateness of management's use of going concern base of accounting. As I told you, the auditor has to conclude on the appropriateness of the management using the going concern basis of accounting, and based on the audit evidence obtained, whether any material uncertainty exists relating to events or conditions that may cause a significant doubt on the entity's ability to continue as a going concern. And not only that, if we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report under a separate paragraph. If at all there is a material uncertainty exists, which is to be disclosed, which is disclosed by the management, it is our responsibility under revised SA 700 to draw the same to the user's attention here. We are required to draw the attention in our auditor's report to the related disclosures in the financial statements, or if such disclosures are inadequate, I need to modify our opinion. Very, very important, my dear professional colleagues, seniors, please understand this particular modification is going to be very, very important. There is a modified opinion only to be given. SA 570 clearly talks about that. Also, there is a WASB issued implementation guide to SA 570 also very categorically talks about how the decision making tree is to be made in case of adequate disclosures made, inadequate disclosures made, going concern affected. Like that, there are different scenarios have been discussed. We will also take up those particular aspects here. But the point here is, if we conclude that there is a material uncertainty exists and the management disclosures are inadequate in this regard, mandatorily I need to modify only. I don't have any other option. Modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of audit of the auditor's report. This is very, very important. My dear friends, what happened was, for the year ended 2020, March 31st March 2020, it was the beginning period of COVID. Actually, for the financial year 19-20, entire financial year, no impact on the COVID except for the last few 10 days time. My financial statements have been substantially prepared. Last 10 days, there was a lockdown. And then the lockdown extended. And the lockdown was having a huge impact where we never seen that. As on reporting for 31st March 2020, my entity was wonderful. But after that, because of the lockdown restrictions and because of other developments, I am unable to operate. My company was into liquidation, or my company is unable to shut down, open up. It lost the going concern impact. As on 31st March only, the financial position has been certified by the auditor as on 31st March. As on 31st March, it was a going concern entity. But subsequently, because of the subsequent events, this particular entity is losing the character of the going concern. It is having the necessity to shut down their operations. Should the auditor has to report on the audit report as on 31st March or in the subsequent year only, I need to go for reporting here. This was a huge debated item, but the essay is very clear. SA 560, read with 570, read with 700. 3 essays we have an impact on this. SA 700 says, say for example, 31st March audit report I am signing in the month of August. 31st March 2020, I am signing in the month of August 2020. Whatever the developments that have happened during March to August has to be considered. And then only I am signing this particular report. Even though the balance sheet is on 31st March, whatever the developments that have happened during this particular period is to be considered mandatorily, which is given under SA 700. That because, however, the future events or conditions may cause, see here, that is the point is up to the date of auditor's report. Our conclusions are based on the audit evidence obtained up to the date of auditor's report. That is, my audit report is not on 31st March. My audit report is on August. So whatever the information and evidences that are obtained during that particular time, everything has to be considered, and accordingly I need to conclude. Very, very important stand, very, very important aspect to be noted. Even subsequent events, as on 31st March, no problem, sir. Subsequently, there is a problem. Should I need to reflect the same as on 31st March or not? Answer is yes. We need to apply SA 560 and then to go for correct way of reporting here. Even though I'm signing as on today, there is also a disclaimer that could be possible. Future, there is a possibility that new changes that could have an effect on the going concern here. Future events or condition may cause the company to cease as a continue to as a going concern, but however, that is not affected on the auditor. my auditor's responsibility will be up to the date of signing that particular financial statements. After signing the financial statements, also subsequent events impact could be there. SA 560 is to be applied carefully. Now let us go for the reporting change that is made under SA 570 here, read with SA 700 and 705. All the scenarios have been discussed here in this regard. Instead of the earlier requirement to report material uncertainties with an emphasis of matter paragraph, basically emphasis of matter paragraph is discussed in SA 706. What is emphasis of matter paragraph? A matter which is fundamental to the user understanding, that has been already disclosed by the management in the financial statement. In order to draw the attention of the users, the auditor goes and reports the same under emphasis of matter paragraph. So please understand, a matter which is fundamental to the user understanding, which has been already disclosed in the financial statement, only to draw the attention of the shareholders, the auditor includes the same in the auditor's report, something called as emphasis of matter paragraph as per SA 706. Earlier, if at all there are material uncertainties or impact about the going concern is treated to be valid, but there are uncertainties are associated, it shall be reported as an emphasis of matter to the shareholders. But now, no longer emphasis of matter can be used with regard to going concern matter. Wherever there are material uncertainties that are getting noticed, there should be a separate heading under the auditor's report, material uncertainties relating to going concern. Like that, I need to title the paragraph, and then in the auditor's report itself, I need to give the impact. Material uncertainties relating to going concern. Like that, I need to have that particular reporting here. Let us, yeah, this is also a CARO 2020 requirement here. New clause, old it was not there. New responsibility have been casted to the auditor. Clause 19. Material uncertainty. On the basis of financial ratios, aging, and expected dates of realization of financial assets and payments of financial liabilities, other information accompanying the financial statement, the auditor's knowledge of the board of directors and management's plans, whether the auditor is of the opinion that no material uncertainty exists on the date of the audit, that the company is capable of meeting its liabilities as and when they fall due within a period of 1 year from the date of the balance sheet, is what the question. Sorry, it's a very litigative question. The point here is, based on the various data and based on the various ratios and information, including the management's plans and the director's plans, the auditor is now going to give his opinion on the CARO reporting, that as on my verification, based on my verification, that there are no material uncertainty exists with regard to the repayment capacity with regard to their liabilities as and when they fall due within a period of 1 year's time. That is, whatever the liabilities that is falling within 1 year from the date of the balance sheet, I don't find any material uncertainty. I feel that the company is having the capacity to repay. So, like that, I need to go for evaluating the same and then expressing the same opinion as per CARO report. Here, nothing to do with going concern, but it is having an impact of the payment capacity, repayment capacity with regard to liabilities. Again, are we talking about current liabilities? No. We are not talking exclusively about current liabilities alone, because the current liability, current, non-current and all will be based on the cycle. Here, what is that is discussed here is any liability that is to be paid by the company which is falling due within 1 year from the date of balance sheet date. So those liabilities based on the inflow or based on the recoverability and based on the aging and expected dates of realization of financial assets, I should be in a position to map it that the company is having the capacity to repay. There is no material uncertainty that the company will not repay. Like that, I need to go for a reporting here, which is also having an impact on SA 570. So we need to be very cautious. We need to be very careful in reporting under CARO as well as for compliance of SA 570 here. This is what the change that is made in SA 570 with regard to auditor's duty here. Let us go for the scenarios that is discussed. Let us go for a careful consideration of the same. Sir, there is a material uncertainty that is available in the company, but there are adequate disclosures that got made by the company already. No problem with regard to going concern. Going concern is valid, assuming that this is the assessment of the management, and the auditor is also satisfied with that particular assessment. Where material uncertainty exists, it has been disclosed properly. It doesn't have an impact on the going concern. Mitigative mechanisms are available. If that being the case, what I have to do? Can I be keeping quiet because management has taken care? Nothing doing here. Include a separate section in the auditor's report under the heading material uncertainty relating to going concern. I need to refer the paragraph in which this material uncertainty impact has been disclosed by the management in the financial statement. I need to also say that in my audit report. This is situation number 1 scenario. Second scenario, material uncertainty exists. However, it is not having an impact on the going concern. Going concern is still valid based on the management's assessment and the auditor's conclusion thereupon. I feel the going concern is not affected, but there is a material uncertainty. Management says, sir, since going concern is not affected, I need not even report. Why I need to report this material uncertainty and why the people get panic and why to have a bad name in the market. So let me not report it at all. You are satisfied going concern is valid, so leave as it is. Can I leave as it is? The answer is no, because any material uncertainty, as per the definition, it is to be disclosed. A disclosure requirement which is mandatory to be made, if it is not made, will be treated as misstatement. Since it is a material uncertainty, it will be treated as material misstatement. A material misstatement disclosure not made will be treated as a material misstatement in the finance statement. I cannot go for clean opinion. And in order to go for a clean opinion, the auditor has to satisfy that I have obtained reasonable assurance that the finance statements as a whole are free from material misstatement. So in the given case, it is not free from material misstatement. There is also a material misstatement there. So the only point here is I cannot go for a clean opinion. I need to mandatorily go for a modified opinion only. I need to either issue a qualified opinion or an adverse opinion. In the given case, I need to disclose the fact of inadequate disclosures on the basis of modified opinion paragraph, and then I need to go for it. I am modifying my opinion not for the purpose of going concern impact, but for the purpose of not reporting material uncertainty by the management in the financial statements. And the third and last scenario is where going concern basis of accounting is not valid. However, the financial statements have been prepared on the basis of going concern. If going concern basis of accounting is inappropriate, but the management has prepared on that particular basis, it does not reflect true and fair view. I need to only go and provide adverse opinion. No other possibility, no other option that is available, because I have sufficient appropriate audit evidence to say that there are material misstatements in the financial statements that is having a pervasive effect, because going concern is always having a pervasive effect. So I need to go for an adverse opinion only. I cannot go for qualified, I cannot go for disclaimer and all. I need to go for adverse opinion only as per SA 570 revised, if going concern by itself is inappropriate. And there is one another aspect, the last aspect, that is with regard to key audit matter. KAM, key audit matter, is discussed as per SA 701. Key audit matter is a matter out of the matters that are communicated to the management of the current year, which is of most significance. It can be presented in the auditor's report as a key audit matter. Presently, the requirement of including key audit matter is mandatory for listed entities. That's it. If at all auditor wants for other entities, if at all the auditor wants to include this reporting, yes, he can do it. Otherwise, it's not mandatory. So key audit matter, basically, it is not something negative about the company. It is out of the matters that I have communicated to the management, which is of most significance. I want to communicate to the shareholders. I am placing it. So what are all the difficult, or what are all the key audit matter, which is more considered to be complex area, and how the auditor has verified that particular complex area, what are all the audit procedures that have been performed by the auditor, can be given as a tabulation to the shareholders, so that they are also aware the intricacies that are involved in doing a particular audit. They should not see that Audit is just a cakewalk. You'll just go and sign it the audit report. No, it is not the case. So whatever the key audit matter and however how that particular key audit matter issue is addressed by the auditor is to be reported, which is not considered to be negative here. So there was queries that whether going concern impacts are there is a material there is a material uncertainty. It doesn't affect going concern. So can I include it as a key audit matter so that it will be simple for me? Key audit matter? No. Here there is a specific guidance by the institute AASB. Disclosing matters relating to going concern as a key audit matter is possible only when the auditor has cumulatively satisfied all the three. Otherwise, it cannot be a key audit matter at all. It is a separate matter. Material uncertainties relating to going concern, like that, I need to go for a reporting here. When I can consider as a key audit matter, where I identify events and conditions that may cause significant doubt on an entity's ability to continue as a going concern, but if I conclude that there are no material uncertainty exists, and I also conclude that the disclosures relating to those events and conditions are adequate, then only it can be treated as key audit matter. The moment it is created as a material uncertainty, the moment it is treated as a material uncertainty, it no longer be categorized as key audit matter. It should be always as a separate matter, that is material uncertainties related to going concern, like that. I need to report it under SA 700 only and not under SA 701. That's it. With regard to the discussions that I thought that I need to have with SA 500. 570, 501, 590 here. If at all any questions are available, I may be happy to take out
yes,
the questions here.
1 minute.
Yeah.
First one is already answered.
One question is already answered.
No, fine. So is my screen visible, sir?
Yes. Yes, I'm having questions like, please explain the term audit and assurance. Okay, very interesting question. Audit and assurance. Fine, let me go for that particular question. Audit and assurance. Sir, with regard to audit, it is nothing but to express an opinion as per SA 200. The audit is defined as an audit of financial statement is defined here. Audit of an independent examination of financial information with a view to express an opinion. That is audit. Incidentally, by providing audit, there is an assurance that is also being provided by the auditor. The moment I say that the financial statement reflects true and fair view based on the outcome of my audit, as an objective to express an opinion is what my objective. So mandatorily, I will be expressing an opinion that it expresses, it reflects true and fair view. The moment I give that opinion, it gives the assurance to the users of the financial statement. That's why it is called a general purpose financial statement on which the opinion are being provided by the auditors here. So the assurance that is provided by the auditor is to be treated as a reasonable assurance, which is a high but not absolute level of assurance that can be provided, because that's the maximum level of assurance that can be provided. In order to provide that particular reasonable assurance, the auditor has to obtain sufficient and appropriate audit evidence so that the auditor will be in a position to express this particular opinion here. And there is a framework for assurance engagements that is as stipulated by AASB, where the assurance levels are divided into 3 categories, actually 4 categories with regard to any work that is done by a chartered accountant. One is assurance services, the other one is related services. With regard to assurance services, it is further divided into 2 types. One is audit of historical financial statements. The other one is assurance engagements other than audit and review of historical financial statements. With regard to audit and review of historical financial statement, because it is relating to financial statement is concerned, and there is something assurance engagements other than audit and review of historical financials, like say for example future financials, say for example projection, prospectus and all can be taken up. So this being the assurance engagement, there is also a related service where no assurance has been provided, just a compilation. Say for example, someone wants me to compile an Ind AS financial statement. I compile, give it, get fees. That's it. There is no assurance at all that has been provided. Or a fixed asset tagging, or reconciliation of head office and 100 branches. All these are all a related service where no assurance has been provided. On the other hand, with regard to audit of historical financial statements, where I am doing to do an audit, then I need to comply with standards on auditing. It is a assurance engagement, which is a reasonable assurance to be provided. On the other hand, when I am going to do a review of historical financial statements, say for example, interim review and all been performed by the auditor, where I need to comply with the standards on the review engagements. SREs are to be complied and not SAs. In such a case, I am going to provide an assurance also, but it is an assurance that is lesser than an audit assurance. Because in an audit, after a deeper verification, I provide reasonable. In a review, as the name denotes, I only go for a limited review and then give an assurance. So it will be something lesser than the reasonable assurance. So it is something called as moderate assurance. And with regard to assurance engagements other than audit and review of historical financial statements, also I require to go for a reasonable assurance here. So that is what the maximum that I can provide. I cannot provide absolute assurance because of various inherent limitations in preparation of financial statement as well as in audit of those financial statement. So we have that particular term assurance. So always we have assurance as a byproduct for audit being the main product. When we mark I hope I have answered the first question here. The second question, when we mark the client in CC while sending mails to the party seeking confirmations, usually sir, auditor will not be sending the confirmation letters. As per process, it is the management who is having the authority to send the confirmation request. So we cannot mark the client in the CC here, where the management will be sending it to the clients, to their customers from whom the confirmation is to be obtained, wherein it is to be addressed, specifically it is to be addressed to the auditor. On the other hand, there is also a possibility, if we simply keep the auditor in the CC, there is a possibility that the person who is replying may not include the CC. It is only reply, if at all he selects that particular reply to the sender, then we may not receive that it is not a advisable practice to going for it. However, if it is specifically mentioned that in CC you need to reply to all and then I get a confirmation through email, then it will be a valid confirmation, provided the protocol, that is the information technology compliance with regard to the sender ID and with regard to the tampering of the data is getting protected here. CARO applicable for report of financial year 2021-22? Yes sir, 2021-22. CARO 2020 is applicable here. Mandately it is applicable for the current year only. Correct. Application of force majeure clause by the management will also apply here. Yeah, maybe because of COVID impact, it is also to be treated. I am not in a position to get the full full meaning of this particular question with regard to the point will also apply here. I'm unable to get it. If at all possible, you could kindly elaborate on it. I am the auditor of a company. I am the auditor appointed by C&AG of a division of a public sector company. I have doubts on the division's ability as a going concern. Is a 570 applicable to the division? Okay, it's a very good question, sir. If it is a division of a public sector company and you are going to do the audit, is it a separate financial statement is going to be prepared? If the separate financial statement is going to be prepared, say for example, I'm assuming that there is a separate financial statement is to be prepared and you are going to be the auditor. For that particular division, you may very much, if at all you have a doubts on the division's ability, very much SA 570 is applicable. Even sometime back at the time of discussion, I told you, even for government company, public sector companies also, this particular 570 will be applicable here. However, you will be reporting from the division's perspective. You will be providing your audit report to the principal auditor, who is going to report on the entire financial statement as a whole for the entire public sector company. I feel, based on your query, I feel for this division you are the auditor, and there will be one auditor who will be reporting on the entire financial statements of the public sector company. If that being the case, SA 600 is to be applied by the principal auditor, who is going to report on the financial statement as a whole. Financial statement as a whole, your division may form a very substantial part, substantial component, because your division will be treated as a component as per SA 600, on which you are going to report. You will be treated as the other auditor, and the principal auditor, who is going to report on the entity as a whole, will be treated as the principal auditor, who is going to report on the financial statement on which the components financial statement audited by you is also included. In such a case, SA 570 reporting shall be applicable, and then he has to consider the whether entity as a whole, whether going concern is really affected or not based on your audit report. It's better to include it, is what my suggestion that I may have, because it will have a component, because SA 600, the auditor who is reporting on the financial statement of the entity has to evaluate the impact of the component. You may be thinking that you are a division, but your division's numbers in the financial statement could be material enough. The entire public sector entity may be solely dependent on your division, which could have an impact on their ability here. So SA 570 is applicable. Also, another point is, a branch auditor is equally having the responsibilities as what of
Sir, are we audible?
that particular all the
Balaji sir, am I audible, sir? Hello.
responsibility for
Selva, I think sir's voice is not.
Yeah, it seems the data is on lower side. It seems buffered, right? For last. That is what I'm getting in chat box also, saying that it's not audible.
Yeah.
Audio is gone. Yeah, it's
One
connected.
All Selva.
Am I audible, Silva, now?
Yes, now you're audible, sir. Maybe if data is on slower side, we'll turn off the video, sir. And now you're audible, sir. For last 10 or 15 seconds, the second part of the question
maybe
is not
some
audible.
connectivity issue.
Yeah,
Sorry,
yeah.
I'm not in my regular place. I'm in outstation.
Understood,
So I'm
understood.
just trying to have all my available gadgets and trying to make it.
Yes, sir, no problem. So, yeah, completely understood, sir. Last 15 or 20 seconds, that is on that question. Right? I'm auditor appointed. Last 15 seconds, what is your loss?
Okay, I will repeat on that particular point also. There is a very valid question that is raised by the professional here. I'm the auditor appointed by C&AG of a division of a public sector company. I have doubts on the division's ability to as a going concern. Is SA 570 applicable to the division? Yes, separate financial prepared and I give a report. That's also a question that I have asked, whether you prepare a separate financials like that I have asked. So he has given that. Sir, since it is a separate financial statements that are getting prepared, all the responsibilities that are applicable to a statutory auditor is equally applicable to the division auditor also, the component auditor also. So say 570 reporting responsibility equally applies to you. If at all you have the doubts on the entity's ability to continue as a going concern, 570 impact has to be reported in your audit report. However, the principal auditor, who is going to report on the entire company as a whole, who is going to consolidate the divisions and branches, and then he is going to report on the financial statements of the public sector company as a whole, will be considering your work. If he feels that it is material, your work is to be included, then he may take, or he may also leave it. That is at the discretion of the principal auditor. However, being the branch auditor, being a division auditor is concerned, component auditor, other auditor as per SA 600 is concerned, you need to mandately include the same and also to comply with. Better to go for considering the management assessment. Management may say, sir, I am a public sector company, government company, so now no problem, I will always continue, nothing doing. On what basis you are doubting the ability is a important factor. Is it based on the financial parameter? Is it based on the other parameter? Like that, we need to take over further. Extended audit procedure are to be necessarily performed, and then to have a documentation, and also better to go for reporting after discussing the same with the management of the entity here. Application of force majeure by the management will also apply here. This is on the litigation and claims.
The previous question, sir. The question you asked.
Litigations and claims portion, correct. Because of COVID, there is also an impact on this. But litigations and claims, the auditor may go and apply SA 501 as it is, and then the auditor needs to have a discussion with the client or the legal expert who is going to conclude, and based on that we may go for reporting. Also, the auditor may also go for auditor's expert as per SA 620, and then he may go for a conclusion here. Any other questions, Silva?
These are the questions, sir, as of now. And thank you so much for excellent session, sir. And we have a...
Yeah.
Sir, am I audible, sir? Sorry.
Yes, you are audible, Silva.
Yes, sir. Thank you so much for your time.
Very good. Thank you. Thanks for the opportunity, dear professional colleagues. Thanks for the patient listening and patient hearing of it. My only aspect is earnest appeal is please comply with these standards on auditing and also document the same. We know you know about very much, you have already complied the standards, but the only point is when it comes for documentation where there are certain improvements that should be made, please ensure that it is also carried out rightly. I thank the chairman, vice chairman, secretary and all the office bearers, including the technical team supporting for making this particular event a wonderful day. In spite of the physical barriers, because of the technology, we are connected globally. So thanks the office also for making this session. My personal thanks to Vice Chairman for making a wonderful introduction and his kind words on this. Thank you, dear
Thank you
friends.
so much for your time, sir. Thank you so much, sir.
Thank you.